Hi guys, welcome back to the channel. So on this video, we're going to talk about LLCs, basically what it is, what is it used for, and its best use and practices. Most small landlord can use LLCs like a shield around their rentals. The LLC in this scenario will own will own the properties, has its own bank account, has its own EIN number, and takes the hit if something goes wrong instead of your personal asset being out there for grabs. But the way you want to set this up, the LLCs, you get all this protection if you set it up and run it the right way. So in this video, we're going to talk about exactly those steps. How to set up the LLC with a bank account and EIN number, and what can go wrong if you treat owning rentals as a hobby. Remember, always to consult a tax attorney and a professional CPA. I am not a tax professional. I am not giving you financial advice. You need to talk to someone about that. Talk to a CPA because to find exactly the best solution that suits you and your current scenario the best. This video is for entertainment and informational purposes only. All right, so let's get into it. So meet Carla, the accidental landlord. Carla bought a duplex a few years ago and kept it in her own name because the bank and the closing attorneys says this is the easiest way. So the deed shows Carla Smith, the mortgage is in her name, and the rent hits the same checking account that Carla uses for groceries, Netflix, going out with her girls, getting her nails done, and so on. So it is going to her personal checking account. So one winter, the tenant's guest slips on an icy steps, breaks an ankle, and hires a lawyer. The lawsuit it doesn't just name Carla's duplex. It names Carla personally because there's no LLC between the property and her house, her savings, her W-2 wages, and all of those things are now on the table in settlement negotiations. That's the core problem, and LLC is designed to fix exactly those types of scenarios for landlords. In this video, also, we're going to talk about exactly what an LLC does and what it doesn't. Okay, so think of an LLC like a separate bucket that holds the messy rental property. When you deed the property into, say, Carla, let's just call it Carla Holdings LLC, and run everything through that LLC, a typical tenant lawsuit hits the LLC's bucket and it hits the LLC first and not your personal bucket, right? So not your personal account, not your personal assets. So in practice, a properly used LLC for rentals can one, put a legal wall between your rentals and your personal income, your personal home, your car, and also your savings. So claims tied to that property stops at the LLC's assets. Keep each investment risk mostly contained, especially if you use more than one LLC instead of dumping everything into a single entity. There are several ways you can do this as well. So me personally, I have a lot of my rental properties under LLCs, and also this is just another addition, another layer of protection where I also have a management company. There's a rental agreement between my LLC and the management company. So the LLC owns the property and the management company manages the properties. It collects rent. It does the whole thing. It does everything. There's just another added layer that you might want to think about, especially if you have more than three, a couple of units, more than two, three investment properties. There's something you might want to look into. So just when you set things up this way, it makes it look like a real business. So let's say Carla Holdings LLC, they collect rent, pay vendors. That sounds more serious to tenants, contractors, and potential partners. Flow the income and expenses through your personal tax return, which is passed through. So you're not dealing with corporate double taxation. But this is a lot of misconception that this is not if I put everything in LLC, then I'm automatically protected. This is not how this works, right? This is not a magic armor. If you're personally negligent, meaning if you ignore safety issues, if you drive drunk to the property and you hit something or you hit someone on your way to the property or while you're there, you're committing fraud, you can still get sued personally. The LLC does not protect you from that. If you mix money or ignore basic formalities, a court can, what they refer to as, pierce the corporate veil and treat your LLC as you. Or they'll take the LLC and they'll say you and the LLC are the same person. Financing also can be trickier and sometimes more expensive for properties held in an LLC, especially conventional mortgages. The LLC is very powerful, but only if you actually use it like a business. The strategic setup that you might want to look into. First, LLC, EIN, and bank account. So let's go ahead and go back to that to call scenario. But this time, someone fell, broke their ankle, but this time she does have it, in the strategic way from day one, right? One, she formed an LLC where the property sits. Best practice in some real estate is to form the LLC in the same state where the rental property is located. It doesn't have to be that way, but it's just the best practice to do it this way. But you can have the LLC set up or created anyway. Because the reason why it said that is it's best practice to do it there because that's where the rental property is going to be, and that's most likely where the lawyers live and where the lawsuits are going to happen. Also, there's many different ways that you can do it. Depends on the state and the rules and requirement. But typically, you can set up the LLC anywhere, right? So the way you're gonna set this up is that you're gonna go ahead, you're gonna pick a name. So let's just say Carla Maple Street LLC. Right. So it meets the state's name and rules requirement. First, you have to file articles of organization with the Secretary of State and pay a filing fee. Designate a registered agent to receive legal papers. You can choose anybody. You can choose your lawyer. If you have an attorney, you can choose your attorney's address to receive legal papers, or you can use your address or whatever address, wherever you want legal papers to get sent to. You can use whatever address for that purpose. You have to draft an operating agreement spelling out exactly, right, who owns what and how decisions and profits work. Even if you're the only member, courts, banks, and different institutions, they like to see this. Now, on paper, the state recognizes Carla Maple Street LLC as its own legal person. Then what you want to do is you want to get an EIN. See, the LLC's, what the EIN is the LLC's social security number. And EIN stands for Employee Identification Number. It's like the LLC's social security number for the IRS. You use it to open a bank account and the LLC's name, because when you go to the bank, they're gonna want to see the EIN number. If you file taxes, you file a tax return and issue 1099s if needed. Identify the LLC with vendors, payroll providers, and sometimes utility companies. You can also, the EIN number is something that you get directly from the IRS online for free, and it just takes a few minutes. You provide the LLC's legal name and formation date, and then you get the EIN number immediately. Really simple. Now, your LLC once you've done all of that, so now your LLC has an identity. It has a name at the state. It has an EIN number, which is their social security number with the IRS. Three, open a clean business bank account. Okay. This is where a lot of landlords blow it and accidentally destroy the protection that they think they just bought or the protection that they think that they just created. Carla walks into a bank with the LLC approval from the state, her operating agreement, the EIN confirmation. The bank opens Carla Maple Street LLC checking account, right? From then on, all rent checks and electronic payments go into that LLC account, not her personal checking account. Right? So this is where you don't want to mix the two because you don't want to give attorneys, in case of a lawsuit, what they call piercing the corporate veil to get access to your personal checking account or your personal assets through that LLC. All expenses for that property, repairs, insurance, property taxes, utilities, loan care, anything that has to do with the maintenance of that property gets paid from that business checking account. Carla pays herself with owner drawers or distributions, moving money from the LLC into her personal account as needed. So on paper and in the bank, the rental business now looks and behaves like its own thing. That separation is a big part of what keeps the liability shield intact. Put the title and contracts in the LLC's name to make the shield real. You have to line up the paperwork with the structure. The deed should show the owner as Carla Maple Street LLC, not Carla personally. Also, that's subject to lender's rules and due on sale clauses. A lot of times what happened is if you do this too late in the game, so let's say you buy a house and you change the deed and you put the deed in the LLC without the bank knowing, that can cause little problems for you later on if the bank finds out. Now, also, leases should name the landlord as the LLC. The tenant should pay the LLC, not caller. Vendor agreements, property managers, snow removal. If you live in the Northeast, or if you live in the South or wherever, the grass cutting, HOA fees, whatever it is, anything that has to do with the maintenance of that property should go through the LLC's bank account. The LLC should be in the client's list of, who they pay, how they pay, who they're doing business with, right? Now, when something happens at the property, every document points the LLC as the responsible party and not caller, right? Smart structure choices that you also want to think about is one LLC or should I have many, a whole bunch of LLC? So there is no one way to structure this. How far you go depends on the risk, on your risk tolerance and scale, how much you're scaling. But for best practice, it's good to put each property under its own LLCs. Many investors start with one LLCs for a cluster of modest properties, then split higher value or higher risk doors into their own LLCs as they scale. So there's plenty of ways to do this. You can also create like an umbrella company that all these other properties fall under. You can create multiple management companies as corporations. The LLCs on the property, but the management company is the one that, deal with vendors, contractors, they collect money, they pay mortgages, they pay everything based on those properties. And then at the end of the month, just spread the money to multiple, if you have more than one LLCs, spread the money to all the different LLCs each month. That's just another way to do it as well. So in this scenario here is that how the LLC protects caller in a bad day scenario. Now back to the icy step scenario. This time the property is owned by Caller Maple Street LLC, insured properly and operated through its own bank account. The guest lawyers sues, but the named defendant is the LLC. If there is a claim, it is going to be a problem for the landlord's insurance, right? Your homeowner's insurance, you have insurance on this property. That's the first layer of protection that's going to kick in. Second is limited if the judgment goes beyond the insurance, the target is the LLC's asset. That property's equity and the LLC's bank balance, not caller's personal home or savings. You get that? So first, your homeowner's insurance is going to kick in, whatever that is, $100,000 per injury. There's a limit to that. And then if that money runs out, the next layer now is the LLC. So they're going to go after that. So could the lawyer try to drag caller in personally? Well, yeah, especially if she was personally negligent or the LLC is a mess. But because the money and the paperwork are clean, it's very hard. It's much harder for them to convince a court that Carla and her LLC are the same thing or the same person. The LLC does not eliminate risks. It just boxes it in. It's like a firewall protection, so to speak. So there's also people make all sorts of mistakes, even though they have the LLC set up. They're still commingle and with their assets and how they use the LLCs. Here are like the 5 pitfalls that you want to avoid when it comes to something like this, right? So number one, your personal assets stays exposed. Without an LLC, every tenant, right? These are the things that you want to avoid, right? Because if you don't have that LLC, every tenant, guest, contractor, neighbor, claim hits you personally. A single ugly lawsuit can force you to tap home equity, retirement funds, or future wages to settle. Even with insurance, nasty injuries or alleged negligence can go beyond policy limits. The LLC is the extra wall that may keep that overflow from reaching your personal life. Number 2, everything gets lumped together. If all of your rentals and your personal life run through one checking account, you make a mess, not only for taxes and for tracking performance, but it looks like you're just a hobbyist in court. And basically what you've done is you've hand a plaintiff's attorney an argument that there is no real separation between you and your rental business. Courts can and sometimes use sloppy commingling, like I was saying earlier, to pierce the corporate veil and reach your personal assets, especially if especially in single member LLCs that act like personal piggy banks. So you want to hang out with your friends, you want to go to the bar, have a couple of drinks, a sports bar, and you're using your business debit card to purchase things. It doesn't look like it's a separate thing. It looks like it's you going out, hanging out with your friends, and using your LLC's debit card as your personal banking account. You want to avoid doing that. Number three, financing, another thing. So financing can get a little complicated, right? Either way, this one's a little subtle. So keeping property in your personal name often makes it easier and cheaper to get traditional conventional mortgages, which are which is a powerful incentive for small investors. Putting property directly into an LLC can limit conventional financing options or push you into a commercial style loan with higher rates or stricter terms. Some investors, what they do is they buy in the name for the loan to get the cheaper rates, then transfer into the LLC later. Again, like I mentioned earlier, you could do that, but if the bank finds out, they can recall the loan. So say if you owe 300,000 or $400,000, they can say, "Hey, we loaned this to you personally. We don't recognize this entity. We want our mortgage. We want our money back, and we require you to give us a lump sum of 500,000, whatever is left on the mortgage now." So this is something you want to keep in mind and think about as well. But the point is that your LLC plan should be coordinated with your financing plan, not bolted on afterwards in a panic. So, number four, what people do is like they assume that the LLCs automatically equals to tax magic. For most small landlords, an LLC is a liability and organization tool first. The tax outcome often looks very similar to owning the property personally because the income just passes through to you. The real value is creating LLCs, clean books, easier partnership arrangements, more flexibility if you later elect S core treatment for active income scenarios. Usually not just for straight rentals, like there's other things that comes into play with that if you do S corp and so on. So you might want to talk to your CPA about that. But if you set up entities expecting huge tax saving without understanding the rules, you can just add cost and complexity without real benefit. And number five, ignoring ongoing formalities. Even though LLCs are lighter than corporation, they still need maintenance, annual reports and fees in many states, updated operating agreements when ownership changes, proper record keeping, separate bank accounts, and documented decisions. So these are the things that you want to keep in mind. If you blow any of this stuff off, and you risk losing the very protection you set up this whole entity to do, right? You're going to lose that because any lawyer or anybody can pierce that corporate veil. So how to think about all of this as an investor, right? If you own or plan to own rentals, a simple mental note that you want to do is, one, what exactly am I trying to protect, right? Your personal home savings, if you have other rentals, right? These are the things that you want to think about. Number two, what's the cheapest structure that keeps a lawsuit from one door, if you have more than one doors, from wrecking everything? And three, can I clearly show on paper and in the bank that my rental business is separate from me? An LLC with its own EIN, its own bank account, and property title and contracted in its name is often the cleanest way to get there. You still need good insurance, good maintenance, and good judgment. But instead of walking around with a target painted on your back of your personal balance sheet, you let the LLC stand in front of you and take the hit if something happens, right? Yeah, so basically, your LLC is like your Superman. So if something is coming to harm you, the LLC will step out in front of it and protect you. So that is going to be all for today, guys. I hope you found value in this video. If you like this content, please like, share, and subscribe, and I will see you soon.